Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim, and let's enjoy this Friday.
What did you dress up as to go trick-or-treating last night?
I was watching it all over at my daughter's place with the two grandsons, aged 9 and 6. A lot of fun, and their neighborhood gets huge traffic, and the costumes were terrific. And then later on, locals and neighborhoods were putting on some fireworks up into the sky. And it was clear and cool, so no rain. It was a good Halloween.
Yeah, I don't know if other areas do this, but in Vancouver, it's a big tradition to put up fireworks on Halloween. Which means you have about 5 days of fireworks because people have to test them out, of course.
Oh, yes.
Yeah. Bob, we start off a show with a question for Mike. Mike didn't say where he was from. Mike asks Bob, how laborious will this rolling top be in the equity markets, assuming that the bull market is about done? Also, is the Fed printing digital money again as to provide liquidity to troubled banks, or is the Fed printing so as to pump up the stock market? It seems that the stock market bulls think that the Fed's money printing is for them.
Yeah. Mike, that's a good question. It's turning into a laborious rolling top. There's through the summer there were terrific excesses in the technical stuff. You've had great momentum. You've had terrific sentiment from time to time, and you've also had exceptionally high valuations. So all of this is. You only get this kind of stuff close to the top of a market. And then on our work, we're watching from earlier in the year when in lesser countries such as Turkey and Argentina, their central bank ran out of reserves, which is the sign of the next contraction. And then it was huge outlying exchanges such as India and China. So then what we're looking for is the standard pattern, whereby then troubles in lesser or outlying exchanges eventually hit the senior exchange. And then that's what began in September when suddenly one day the money market just ran out of liquidity. And the Fed was there with huge repo operations, which provides the street with money now and takes it back overnight. And then they've since then gone to more aggressive. So the pattern worked out. Disaster outlying and then a discovery of a liquidity problem in the fall. And the Fed is, I've got a chart. We published a chart on it yesterday showing a dramatic increase in this type of operation. And the last time they did it was in 2007, 2008, and you still went through that bear market. So also with this is interesting because there has been confidence about the China trade story deal, and then you've had good employment numbers, although the economy, global economy, is weakening. So the net on it, Mike, is that the market action itself is now suggesting that it's going to be a big rounding top. There are all the signs of a top, but the bulls are pretty determined in here. And also, in November, you're getting past the seasonal period when liquidity problems can be discovered. So this stretches things out. The yield curve is now suddenly broken down, and that is a negative. Credit spreads are back to widening, and that's also a negative. And you still have the probability that crude oil prices could set a seasonal low in December, January, which would be a downer for the market. So it's not going to be comfortable for the bulls, and it's not comfortable at the moment for the bears.
We'll have more with Bob Hoye right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Bob Hoye. Bob, why is the Fed losing its influence?
Yeah, that was a headline that they used not a common word, that the Fed was losing its potency or its power, because, credit markets are turning adverse. And what I'd like to point out is that Fed never had the power that those who formed it back in the early 1900s thought it had. And at that time, bankers in Wall Street and brokers knew that when you had a financial crisis, it usually preceded a recession. Because that's the way it works. Excessive speculation, a collapse of speculation, and then the recession. And that's worked that way for hundreds of years. So anyways, with the Federal Reserve System, with regional chapters across the big nation, they figured they could have this lender of last resort would be there to bail out a problem company or a problem bank, and then all would be well. So the lender of last resort would prevent financial setbacks, and then there would be no recessions. Ha! There's been, according to the National Bureau of Economic, whatever it is, NBER, there's been 18 recessions since the Fed opened its door for business in January 1914. So the hypothesis does not work. So then the Federal Reserve has never had the power that its promoters originally thought it had. And the financial markets and the business and industry are very cyclical, and they had hoped to end the business cycle. And actually, when my own experience in the markets in the mid-1960s, when then macroeconomists had discovered the huge computers, mainframe computers, and then they started whizzing up models, economic models, and they then felt even bolder in 1964 and 65, saying that the recession had been eliminated. So the markets are beyond management, and the people who set up central bankers really are dreamers. But the problem is that for many people, central banking works, and it is there to prevent bad things from happening. So then investors think there's no risk. And when investors think there's no risk, they get overexposed, leveraged up, which then is the risk. So this is going to be unwinding. And I think on this one, Jim, and this is why we referred to that headline, is that there will be some serious, on the next recession, there will be some serious examination of the theories of central banking, because they then, in the last decade, have used trillions of dollars of taxpayers' money to prevent bad things from happening. And if we are in a recession, that'll be a very bad thing. So I think this time, on a contraction, the economics system can become self-critical, and also ordinary people are going to have the common sense to say, "Hey, guys, it's not working," and it'll be part of the popular uprising where people are attempting to take back control of their government, and they're going to make sure that there is a sound currency whereby radical speculators can't fool around with policy, and I'm looking forward to it.
What about the Fed's non-quantitative easing, quantitative easing of $60 billion a month?
Jim, you just said both sides of the story there. They are not going to call it quantitative easing, but at the moment, for the last few weeks, the market has been more positive than one would expect at this time of year. The time for discovering some problems still open. We could still have a seasonal low for crude oil later on in December or maybe into January. So it's not, as I said a little while ago, it's not a place for the bulls and it's not a place for the bears. It's just a very strange market at the moment.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, China has had what kind of massive bond issue? How big is this thing?
Oh, yeah, $1.1 trillion bond issue. Or what it is, they're doing, I'm not sure the exact size, but a huge convertible bond, which means it's a bond that's convertible on the owner's choice into equity. But it attracted $1.1 trillion in bids, obviously oversubscribed. And when I first came into the business in 1963, I remember then the biggest bond deal ever done was when Howard Hughes, personally, he owned Trans World, TWA, the big airline anyways, sold it, and there was a $400 million bond involved, and that for decades was the biggest bond issue ever done. And here you are out, I'm not, as I said, the article doesn't say how big the issue was, but it attracted $1.1 trillion in bids. The numbers are immense. So that one is a kind of, we'd list this as a financial oddity, an interesting news piece, but it shows that there's incredible demand for that particular product, and this is a sign of terrific confidence. So we'll see, because also in the equity market, when you get in very hot new issue market, or as they call them these days, IPOs, they can be oversubscribed because they get very popular, they make big gains, and then there's always the last issue in a new issue market, the turkey, the one that doesn't work, and then everybody gets stiffed on that. So we don't know if this convertible bond issue will be a turkey or not. We'll have to wait and see until next year. I'm going to see if there's any way of keeping track of it as we go along.
Bob, you also looked at another headline before we went on air, and it was about Trophy Tower construction stopped. What's the story there?
Yeah, this is in Los Angeles, and it obviously a a huge construction project. The headline was that a $1 billion trophy tower construction halted, and then the rest of it is that China was pulling back. So this was supposed to be a crown jewel of the downtown Los Angeles urban renaissance. And what have you got? Unpaid subcontractors, things like that. So it's suddenly turned nasty. So when I saw about a tower construction being halted, it reminded of an item in the Bible. So I looked it up, and it's Luke 14:28, and the King James Version is, "For which of you, intending to build a tower, sitteth not down first and counteth the cost, whether he have sufficient to complete it." So over ambition and running out of money is not nothing new, because this goes back to biblical times, and we see records in Rome, for example, 2,000 years ago, of panics in the mortgage market, where suddenly people who had a lot of money, and next week they didn't. And so there's a long history of ambitious financial speculation, and even the biblical reference suggests that even then some people or some governments took on more than they could handle. So, my gosh, again, it's the Bible, that there's nothing new under the sun, which was Ecclesiastes' observation. So, but it's always fascinating, Jim.
Bob, thank you so much for chatting with us.
I say, good to be with you, and we look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, like Mike did today, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network, and you can find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.